Uh. Uh.
Good morning, good morning, good morning. Today is Monday. Let's get it started. Update the team. All right. Pull up the chat. All right. So as you guys see, change some things around on the live just to make it more easy to see. Not easy to see, but just not boring. So I haven't looked at the market today at all. So this is my first time looking at it. So we can go ahead and deep dive into it. But if you guys can hear me, give me a thumbs up real fast. So make sure. Appreciate it. Yes, sir. So the market is consolidating right now. So while we're waiting on that, I do want to touch on something real fast. I told you guys I was gonna touch on in the group. So as you see, we had one of somebody in the fam, because we are family. 4TW is a family. And we had somebody that was kind enough to basically tell us what was transpiring or going on with them when it comes to just having a bad month. And I had a lot to say when it comes to text, but I couldn't text it all, so I waited to go live real quick, just to go ahead and say it. But that right there is the most crucial, most pivotal point in your whole trading, because at that moment of time, you feel like, what am I doing? What am I doing wrong? Why am I not getting this right? Why am I having these red days? And it's just something that's like, do I need to go research more? And I need to go find out more information? Is there something I'm doing wrong? And then you sit back and you look at the trades, and it's like either I'm over trading, over leveraging, not taking the right setups, not waiting for right confirmations, being greedy, all these different things that can be a mixture of what's going on. So sometimes you got to sit back and really take a step back and figure out, how can I fix this? What's going on with me? Is it me, or is it what I'm dealing with? And it could just be life. And at that point in time, you have to take the initiative to step back. That's something that I have to work on. So I definitely feel you with that, because I haven't stepped back. Like, I took 1 day off in the past couple of years, maybe 2 at the most. So I definitely feel you on that. Just keep pushing, keep striving. and don't focus on today's result. That's where everybody gets it mixed up at, because they're always focused on today's result. Today's result is not going to be the end result. You can start off bad today and end up great, or in a great position. So now ask yourself, okay, if I started great today and I ended bad, would I still be happy for today? You want to end up great. So in the midst of you starting off and getting things going and getting things established with trading and trying to find some type of consistency in it, that's the hardest part, especially trying to go fund it. A lot of people think fund it is the more easier route. It's actually the harder route, because you're wasting time on tests and trying to get to a certain point when you can do that same thing in a live account. And that's why I love the fact that before I went the funded route, I went the live route first, because I didn't know about funded. And that's just added stress onto it. But not to say that it's the best route if you know how to use it. So I don't want to discourage nobody from doing it, because it's the best route to do it without being the most cost efficient. But at the end of the day, just focus on the end result. It's a marathon. We're not trying to get there quick. I promise you, I spent so much time just running in circles, and not realizing it was just my habits, the way I was looking at the market. I'm not keeping it simple. I'm over trading. I'm not taking base hits and walking away. I'm not seeing a trade come back and just closing and being good. It's always that mindset to stay there and figure it out, because that's how we talk, especially as men. Just figure it out. But sometimes you got to be able to step back. Like, you know what? Cool off. And that's why I'm glad you took a little step back, try to get your mind right, and then come back to it. And it be like that. But just know, here, 4TW, we gonna get it figured out, because you got me. You guys got me. And I'm always a phone call away. I'm always a message away. I'm always a live away. Because I know all you guys are going through. I think I done been through everything when it comes to this. Ups, downs, lefts, rights. Feeling like I'm not good enough, feeling like I'm too good. People don't mention also when you get big headed, because you get the winning trades and then you feel like you got everything figured out, and then boom, reality hit. You start taking these losses in the market. You don't even know that the market conditions had changed. You thinking that it's you, and now you go searching for something else, and it's not even there, because what you was doing in the first place was perfectly fine. So you want to make sure that the mindset that you come into the market with is concrete. And that's why we have a system-based way of trading. Like even right now, like you see, I have all black candles, because I don't look at up close and down close candles too much. So I'm eliminating the color of it, which I do from time to time. Usually when I'm teaching, I have the colors on there, but when I'm trading myself, I just look at black candles, because I'm looking at market structure. I'm looking at premium and discount when I get a range, and inside of that range, I'm looking for the model. And in the model, you can see it perfectly fine without looking at the colors of the candles. I know when I'm in the premium, I'm looking for the price to push down. If I'm in discount, I'm looking for price to push up. So all these things you want to eliminate when it comes to trying to figure out. Wait, hold on. Your voice has disconnected because. Wait, okay. You guys still hear me? It said I got disconnected. Okay, can't see now. Okay, let me see if I can fix that. Okay. Yeah. Be trying to balance both funded and live. Yeah, and trying to balance both funded and live, it's a battle. It's definitely a battle, because the mindset on trying to balance both, you got to have two different ways of looking at the market. What funded is more of a long-term thing. And then when you're having a live account, it's more of a get in, get out, get what you can get and get out. But just imagine you have a live account, right? And the market's not really moving right now, so we can discuss this. But when the market is not moving, and you're having, like today, and you're trying to catch a bigger trade, you can catch a bigger trade on a live because you have the capital to do it, or you have the contract size to do it. But technically, depending on the account you get, you really don't have much if you think about it. So let's say you're looking at the live and you make $200, but on funded you could have made maybe 600. You could have made triple that. So then you start expecting your live account to do the same thing that the funded account is doing. It's not like that. You got to have a different mindset. So that's why I said I love that I came from live accounts first, because I was able to take small accounts and make them bigger. I got a live that I did. I gotta find that video, but I sat on the camera and I had a CFD account. CFDs is basically NASDAQ 100, kind of like NQ, but it's the like offshore broker type thing. So I don't do that. But I had the account there, and I got an email from that I had like a couple dollars in there. So I'm like, oh, okay, it was like $60. And then I'm like, I wonder what I could do with that. And I think I traded it just to be trading it. And then I got down to 30. And then I sat on my computer, I went live, or I recorded it, and I took that, I think it was like $20, $30 to 100 within 1 hour, or whatever time frame it was. But it just goes to show that when you have the skill set to do it, all you have to do is just do the same thing over and over and over again, and just fine tweak certain things. But you have the foundation, or you have the vehicle to get you there. It's just about how do you drive the vehicle. It's just like people that go into the shop and their car is always broken, like every single time. It's like, how do you drive? Like, are you driving super crazy? Are you putting oil in the car? Are you making sure that the antifreeze is good? Are you hitting potholes, turning corners too hard, zooming through traffic, on and off the gas? All that makes a big difference. So I want to be on cruise control as best as I can without having too much anxiety on trying to focus on making the market do something for me. Like today, like most people will get on the market. As soon as they go on the market, immediately like, I got to go find something. I do not feel like that, because I know what that brings to. And even coming to the market and having days, let's say you are doing live and you are doing funded, don't have both days. Don't have one day where you're doing both. Pick days to where you're focused on one for one day and the other for the other day. Or I'm gonna do focus on funded these days, or these bigger trades. But on my live account, I'm looking at these smaller trades, or for these days. Like, you have to separate them, because the mindset has to be separated as well. You can't have the same mindset for both. They're two so totally separate different accounts and two separate ways of looking at it. And with the funded, that's just a journey by itself. Just even getting to pass it is one thing. Now you spending however much time to try to pass it. Then on top of that, trying to get a payout from it. That's all the skill set by itself. So yeah, man, I definitely feel you guys when it comes to just, struggling, trying to get it figured out. But trust and believe. Just keep it simple, man. Just keep it simple. You guys got the tools that you need. That's what I'm trying to do on the lives. I don't want to entice you guys to just take every single thing. Just wait. If I'm teaching you anything on the live, I'm teaching you patience. I would love to go on the live and go into 1 minute and just scalp all day, up, down, up, down. But that's not trading. That's gambling. You're risking it. And I'm not trying to risk profits that I worked hard for. Just imagine this. I'm pretty sure some of you guys already been there, but just imagine you work 3 weeks of getting profit, just profit after profit after profit after profit, and you killing it. And then you have one day and you lose everything. For one, how dumb do you look? How dumb do you feel? Then it's kind of like, I can't believe I did that. Because you went on tilt. Because you just, and that it's all it takes is one single day. Even if you lost half of it, the fact that you just lost half of something that took you 3 weeks to get, no, I'm not trying to risk that. Yeah, life is already a gamble by itself. So it's a right way to do it. I'd rather gamble on the right setup with the foundation of knowing that I'm at least looking at everything I need to look at and knowing the direction I need to go. And if it's not right, it's not right. But I have risk management intact to where if it gets to a certain spot, you take me out and I gotta watch it. And even if it gets stopped out, still see how you could have did better. If nobody practice or back test this weekend, you still doing it wrong. I shouldn't be back testing or studying more than you guys, and I do it every day, 7 days a week. I find some window opportunity just to get on the market and look at it. And I won't look at present day. I'll go back and look at old days, just to look at times where the market did shift. I'll look at this time last year and look at how the market was in comparison to now, just to get a general idea. But all those things, man, they add up, they compound. So that's what you want to do. But at the end of the day, just take it slow. And slow in trading is fast. Losing in trading is winning, because you're taking a lesson. If you learn from the lesson, now you can 10x that lesson. And that lesson can make you way more than you ever would. But sometimes it's just simple as taking a step back and having these index cards, man. I'm telling you, these things are key. Like flashcards. I just sit here. Like, I got sticky notes everywhere. Look, I got this. This is a whiteboard that sits right in front of my desk. And then I got the whiteboard back there. And then some of you guys know when we first talked, this book right here. This book is basically when I first started, and I was getting my plan together. And this was me telling myself that I had to have a plan. I had to have something that I can follow each and every day and not make it complicated. But if you don't got that, even if you got it from me, if you don't got it for yourself, you're not building it for yourself because you had the foundation and you just build on it. If you don't have that, then you're gonna keep struggling. And it's a good struggle, because that struggle can make you into what you want to be. But there's a way to go about it. There's definitely a way to go about it. I hope that helped, man. I hope that helped. So let's go ahead and get into the market. Like I said, I haven't looked at the market at all as of yet, so we can look and see what's going on now. So like I was telling you guys, with market structure, that's my primary focus. So when it comes to looking at the colors, all I need to look at is just market structure. I can determine how the market needs to play out based off what it's looking like. So for the ones that the color does help, I would say follow along on your chart. But if you look at it, it's the same thing. If you're seeing candles that are going up, you know it's bullish until that candle flips and then it becomes bearish. Because whenever a candle opens, you know it's opening here based on where the candle was at. So let's see what's transpiring right now. Price is going to take out Asia high. So let's go down 15 minute. All right. So we had this here. This one and this one here. So then you would say, well, man, we missed it. You know, like when I say I'm not focused on taking a trade Monday, like it has to be like a super clean setup. I don't even want to do nothing like this. So you would have to deal with, got the initial stop loss there. And this is on 15 minute. So you got initial stop loss there and you have one here. So that one was broken and you have the second one here. So now we go down 5 minute. Go down 5 minute, boom. So as you see on the 5 minute, we had this price leg down. Our inversion would have been here. And then confirmations would have been here. So those would have got broke here. And then we had this push down here with no inversions inside of this on the 5 minute. So let's see how price breaks it upside, which we did already. Let's go ahead and get in sync with market structure. So what I want to do now, before we deep dive into it, oh yeah, so this was the trade that I seen this morning. Let me show you guys. Like I said, I didn't break nothing down on the chart. I did glance at it. At this time, the market was here. What time I get her up for school? That was 7:15. So yeah, this was that push down. So 6:15. Yep. So this was that push down, and then it was quick 1 or 2, taking out the high. We had this high and then this low, and then we had that push up. So this is the dealing range. And it's that simple when you know what to look for, because you could have looked at the bigger range and been focused on this big range from here to here. But when I'm looking at the price at that moment of time, I'm just focused on where price is at right now, just like where it's at right now. What's happening right now? So if you look at this, you're automatically looking at, let me show you guys real quick before we go back to the higher time frame. Remember I told you guys about how I look at liquidity. When I'm looking at liquidity, depending on what time frame it is, I would rather do it on a higher time frame, like a 15-minute or 5. But 3 is cool, depending on how much price action we get, and if we get nice expansion. But whenever we have price action like this, when I see price taking out a key high, like this one, so you see how this one was swept, and then we actually broke it. But when we broke it here, this imbalance right here is where it came from. But it came from this swing low here. So as price is pushing up and it made this imbalance here, once price pushed down into it, my focus goes to this imbalance right here, the high of it. Remember I was telling you guys that I look at the liquidity like that as well. So basically what I'm saying is, instead of me looking at this whole entire range, if I'm looking for price to turn around inside of a certain area or a key area, I will look at that low to whatever high is made, which is not made yet. This will be it. If this candle close like that, it'll be like that. And then price will be balanced back and forth inside of this dealing range until it breaks out above or below, depending on what price wants to do. But we just took out this high, but what if price is inside of a continuation? What if it's going to continue up? Well, if you're looking at highs, you're looking to go to the downside, well, you know that price can likely go to the downside, and then we can go for this low or this low. But remember that we have Asian range high right here that hasn't been taken out yet. So if price does want to go up, then we can potentially go back into a discount really quick and then continue to the upside. But this candle right here, this swing high is not made yet. So this candle right here can very much take out that high and keep going up and not make a swing high yet. So I'm just waiting for that candle to close. Once that candle closes and it does give us a swing high, then that will be that 3-minute range. And then from there, you just build off of that, because what you're doing is you're following order flow. You're not just looking at the bigger picture. Like, you can look at the bigger picture like this. Yes, you can definitely do this. But sometimes if you don't want to wait for the bigger trade and you're trying to find something that's more in and out, that's why I look at the same way I'm looking at liquidity right now. I look at that on a 15-minute, because it gives me the wiggle room to go down to a 5 and 3 and get in sync with that and just take a trade off of that. And then off the 5 and 3, you can have something that's kind of like this, or decent size. So let's see real fast if I have anything on 15-minute. So like, quick example of that will be, so you see how you have this low, this high, and then you have this push down. Well, if you have this push down, this imbalance right here is the last imbalance before it became inverted. But what I'm looking at is actually the low, also the low of this imbalance here. And then once price goes above it here, you see right here it's labeled imbalance liquidity here. And then once price goes up and takes out that high and we make this new high here, now my range will be not from here to here. It will be from there to there. Because for me, that's the most recent high that can be taken out. So it'll be that. And we said we had that wick right into a discount, and then we pushed up from there. Now, there's nothing wrong with looking at it like this. There's different ways to look at liquidity. It just depends on how you're looking at it. So like I say, a market like this where these got these super long wicks, this is not something I want to be involved with, because that's a lot of back and forth. Now, are there opportunities inside of that? Of course. But you have to know what type of market you're in at that time. Think about it. We're still inside the Asian range after the market opened. We've been sitting inside of here for how long? Since 5 a.m. We broke out of it, and then we came right back up into it, and we've been sitting here the whole entire time. What do I look at Asian range as? Consolidation. So everything makes sense. You just need to know where you're at. So if I'm looking at it this like consolidation, I don't even have to go to a higher time frame to figure out what's going on because I know I'm in consolidation. But I do want to show you guys just so we can look at it. So let's look. We have our old markups from last week. Yeah, here we go. So these are open OBs, order blocks. I was looking at them last week. I don't use them because all it is a up close or down close candle that price goes back into. But the reason I have all my colors the same is because price goes to that anyway. Whenever you have a up close or down close candle that's actually important, you're going to have imbalance right above it. We already use imbalance, so there's no need for us to use it. So I was showing the student, I was showing the student that reason why I don't use it. Let's take that off and then let's go weekly. Okay, so we go weekly real fast. So we have our weekly high, which we broke here and here. This is our weekly high now. We're already breaking above that now. And price looks to be in the form of continuation, right? So now what I can do is turn this off right now and look at what's happening right now. How can we build off right now? So what I see is this midpoint. This is something price just bounced off of, and we got that push up. Just looking at that by itself, and see how I got two charts, one with color, one without. So let's see. But let me go back to this so I can show you guys. So if I go weekly and then to a 4 hour with that same bounce off that midpoint, look what bounced off the midpoint. This long wick and then this push up. So now, same concept I told you guys on the lower time frame. Even if you looked at it on the higher time frame, it could be the same way. So what do I mean by that? Well, even if I turn this off, let's turn this off right now, and just look at market structure. If I go, this is this BISI right here. Take that, drag it across. This will be my imbalance liquidity, and then I'll go from this swing high to this swing low, and then this would be my dealing range for that moment in time. But this is on the 4 hour, and then this is the range we're in. So that if I take that, go to a 15-minute, we're still in consolidation inside of the Asian range. It's just Asia high, and then this swing low that broke the Asian range low. And how far is that away from this high that we talked about earlier? 9 points basically. So we're still in this same general area, using a weekly, using a 4 hour, using a 15-minute, because prices consolidate. It's not going anywhere. So you're building off of that. So like most people do, they look at, well, I got these up close candles here. Price will stay. This is steady. Keep price pushing down. Then what happens if this doesn't keep price pushing down? Then you have to rely on imbalance. You want to rely on market structure, something that's so simple, but it helps you separate everything. Because when you're looking for premium and discount, you need to know where you're at least, and then from there you can build your case inside of that range. But for the most part, you want to know where you're at. So what I want to do now, let's take this this was that daily that we had. We're well past that now, yeah. So I don't even need that. So let's go back to this chart. And let's focus on current data because we know that we're already consolidating. So now let's go back 5 minutes. And we still haven't taken out Asian range high yet. Prices is still sitting there. So you're just waiting. So we know that we took out this high here. And then now the price can likely still push to the upside. So we go back to that 3 minute that we said earlier. I treat the 3 minute and the 5 minute the same. And as you see, I haven't went down to 1 minute yet because I'm not trying to entice myself to take something because it's there. I'll show you guys, but at the same time, you don't want to just take anything because you just see it sitting there. Like you're gonna see models sitting there every single day. Buy models, sell models, they're always there. It's just which ones are you looking at? So this is the range I'm in right now. And I'll tell you guys, we could potentially go into a discount before we go back up into that Asia range high. You see we're sitting there now, so let me show you now. Let's see what we have in here. What do we have? Well, for one thing, we have, you guys, a couple seconds to look at it, see if you see anything that entices you or makes sense, and then I'll mark it up. Give you a couple seconds. All right, so what you want to look at right now is, well, this is the range, right? But you always want to ask, how did it get here? Well, how did it get here is from this consolidation here. We expanded up and we came back down into it. Where did this come from? This came from this expansion. But where did this expansion come from? This consolidation. And you can keep going back and keep going back. Well, what do you see? You see that this consolidation bounced off of this one. So now you know this is a key consolidation right here. Just use a market structure. So now, prices at discount back at this consolidation range. You just don't have nothing clean to take it off of when it comes to the model. Because do you have an inversion that you can use right now? No, not inside of this. But this is how you want to look at it. This is how you want to make it make sense. Don't overdo it by thinking that the market has to give you something. It definitely doesn't. Now, if you want to take it off consolidation, be my guest. That's something you can do, but are you following the model? So if this trade doesn't work out, can you say, okay, I didn't do this right, I didn't do that right, okay, this played out, and then I did that. Is that part of your setup? Is that part of your model? No. So just because it bounces off of consolidation doesn't mean that I need to take it. Give me 1 second. All right. School stuff, man. School started back. Whew. Okay. So, like I was saying, you don't want to take anything because do you have a model present? Now. You do have a model that's sitting there that you could take based off if you like it or not. And I'll tell you right now, this is the confirmation right here. So if you're looking at that, yes, this is the model. So confirmation right there, we bouncing off of it right now. This is stop loss right there. That's 15 points. Asia range high, that's 22 points. But referring to this one right here. That one. And then that initial stop loss is inside of this inversion. Now, this would be something because you're at a high. That's something you got to keep in mind. So, even though this is a reversal model, this can still be used as a continuation if you know what to look for. So, are you looking for a price to go to Asian range high, or are you looking for a price to start to run to the downside? It's based off what you're seeing. So, like I say, with this trade, is it worth it? Because you're going to Asian range high. Well, you have to go for this high first. And a 1-to-1 is that. So even if it went to Asian range high, and then could you see it going higher? As you had to ask yourself, but you are at a high. So trades like this, you have to be okay with the risk and just dial it back. Let's say this is something you want to take 1-on-1. If you want to take it, by any means. Me, I don't take 1-on-1. Now, when it comes to risk, I'll adjust my risk sometimes depending on the trade that I like and I want to give it some room. But that's what the initial stop loss is for. But in this case, you're at a high, and this can be either a continuation or this can be reversal back to the downside. So if you're taking something like this, you want to be wrong quick, because you know that you're basically going against the market unless it's a continuation. But this is 1 minute price action as well. Okay, went straight to a premium and ran straight back to a discount. Look at that. Because you're at a high. So when you see price run like that and then it comes right back down, and we're in consolidation. So you have to put those things into perspective. There's that push back down. Look at that consolidation. It's marked up. Watch our price plays inside this consolidation. One second, guys. Has anybody taken a trade today so far? On accident. Man, you on punishment. I know it's on punishment. See? Right there, John Wick, man. And that's what I was saying this morning. Just that's nasty price action. Like, and price is not going anywhere, so it's ranging. So you want to be able to see that ahead of time sometimes, and sometimes it takes just zooming out. And it's like, it's not really going anywhere. We don't have no real volume yet, so kind of sit around waiting. Like whenever the market opens, you want to see that thing run one way or the other. When it doesn't, it's like, if it's not gearing up for something and you can see it gearing up for something, just simply sit back and wait. Or if you have a trade that has good risk, that's the key. Good risk, nice risk, not too much. Gives you 2-to-1, 3-to-1, cool. But if it's barely giving you a 2-to-1 and it's already in consolidation, we had a high, the smaller range is giving us a discount buy, with the bigger dealing range is saying we in a premium, you're going against the grain, which it could work. It could. Price can bounce off this discount and continue up. But is that something you want to deal with? Sometimes you gotta be like, nah, I'm good. So some models have bullets bias. Yep, exactly. And that consolidation is key, man. It really, really is. And the less stuff you ask for the market to give you, and you keep it simple, you'll start to recognize how fast you can spot out a market that you don't like. That's a skill set in its own, because the market is not going to tell you that you don't like it. You need to see it, like see it already trying to transpire. I gotta go make a quick phone call, so I'm gonna let this play out, and I'll be right back. Gotta call a school. just like that, we are back. Look at this. Market has been nowhere. This is where you get chopped and screwed like a mixtape. There's another model popping up right here in 1 minute. So here. There. Pretty sure you guys see it. There. I'll show you something. Right? You got this right. Look at where you're at. Forget the model. Look at where you're at. You're below consolidation. After the sweep of this low, we came from this premium and now price is pushing to the downside. So do you still feel that price is going to go for Asian range high? Well, this initial stop loss right here. So even when you have the model, if you don't know where you're at, you're always going to get caught up. But if you're able to accept the risk and you say, based on where I'm at, I feel like this is going to play out. It's giving me a small risk. If I risk a small risk and the trade doesn't go good, cool. But if you're not looking at it like that, you're looking at the model always to play out every single time, no matter where you see it, you're looking at it all wrong. We know that we're at a high. So you keep seeing the model, but the model is not playing out. Why? Because you're going against the grain. Even though you see something potentially right there that you're trying to go for. So let's say I was trying to go for Asian range high and I had a decent trade, like let's say this one. Let's say I didn't even see that consolidation there. And I said, you know what? I'll take this one. This one is giving me at least 12, let's call it 12-point stop. So from Asian range high, that's 35 points. That's a 1 to 3 is just at the low. So that's too close. You don't want your stop loss to be right at the initial stop loss. You're gonna have room. So let's say you say a 1 or 2. So a 1 or 2 is giving you 17 points. For me, depending on the contract size I use, 17 points would be too much for me to see if it's gonna play out. So in this case, I'll be like, nope. Now if it was like 10 points, 8 points, to see if it's gonna play out, cool, let's run it. I'll see if it plays out for that. Because you gotta think about the cost for it to play out. Is it worth you seeing if it's gonna play out? Are you confident in this? What's your scale of confidence in this trade? It's 50-50. Okay, you don't want to risk it super heavy. What's your confidence in this trade? 75%. Okay, you can go a little bit heavier because you feel confident in this trade. Now, if you feel, I would say anything above 85, 90% that you feel confident in the trade, then you push. But if you feel 50-50 about it, based off your confluences and your surroundings, you have to look at the risk. Forget the trade outcome. What's the risk? Is the risk worth it? For me, 17, 18 points is not worth it, especially on just one mini. That's not worth it for me because I'm risking on 500 to see if it potentially plays out. No. So you got to have that mindset, man. And then you have stuff like this happen, and then you get so frustrated because it's supposed to push up. It's supposed to go up. What's right there? What's right here? Consolidation. So even if it did go up, you want to see it break the consolidation. And by that time, it's probably going to push away from your confirmation. So now what? But you can't let the market have you in a chokehold because you're not following flow and knowing where it's at. You see Asian range high, yes, of course. But is Asian range high law? No, it's a confluence. What is the market telling you? That's the key thing. Let's go to a 15 minute. We've been in 1 minute for a minute now. So on 1 minute for a minute. This one. All right, so boom. Look at the 15 minute candle. Look at these wicks. That's gonna drive you crazy. You want clean push-ups, clean push-downs. I say really going giving those back and forth. It's really smooth. It's really at a steady pace. Nothing is super aggressive besides the expansion. This, no. Because now I gotta deal with just thinking this trade was gonna play out. Because look, if you look at it like this, okay, price pushed down, price pushed up, we consolidated, and then price is basically come back to this consolidation here. Cool, but when you introduce the wicks, now you're dealing with all of that back and forth, because these candles at once upon a time were extremely bearish or extremely bullish. But then it gives you that seesaw, and it's like, man, I don't know what I'm looking for, because you're trying to travel in muddy waters right now. You're not gonna get nowhere quick. So it's just wait for the right opportunities, like this consolidation right here in a 15-minute. You could mark that up. Look at that. So many key areas in the market that you can use. Like even when we had this right here, you could look at this consolidation. Right there. And see how we came back to it, touched it, went to this consolidation, came back above it, took out that high, came back to this consolidation, went above it, failed to go continue above it. So we closed right back below it, and we're back at this same consolidation again. So you just see that this is an area where price is not going anywhere. And you try to push. Like, no. Like if you can't find a lower time frame clean model that you're confident in, take small 1 to 3 or 2 to 3 to 1, 2 to 1. Take that and walk away from it. But if you can't find that and it's not easy to get to, cut it loose. Walk away with that day with lessons that you don't have to pay for. Free lessons. Let's see. So we got that consolidation there. Just looking at market structure, so you obviously see we're in this high and this low on the 15-minute range. And you can look at current range, but what's current range is inside of here. And this bounce here is inside of a premium. So even if this was consolidation you wanted to use, you want to use it down here. If it was down here somewhere, but it's up here. Now what you can do is see where this came from. Like we said earlier, and then we know that it came from here. This consolidation right there. Finding consolidation can solve a whole lot of problems with taking the wrong things and waiting for the wrong trades. So boom. Price wants to come down. After we took out that high, I'm gonna take out that low, play around inside of here, then push back up. Cool, but we're coming off of that high. Super simple price action. Just look at the wicks. It's super nasty. But remember what I always tell you guys. Today is Monday. It makes sense. When the market is consolidating on a Monday, it makes so much sense to me, because it's like that's what it's supposed to do. Price is open. It doesn't know what it wants to do for the week. Let Monday pass. If Monday gives you a trade, cool. If it doesn't, oh well. Let Monday give you the price action, and then go into the next day with the price action you got for Monday. Wait, I had the mouse hovering over the button. Oh. No. Yeah, that's the worst. I think I told everybody that story, man. When I first started trading, I used to have my daughter on my lap, bro. She was like banging on the keyboard, and back at the old broker I used to use, you used to hear that little, like this little chime that like ring off when you get into a market or a trade. It was all MetaTrader, yeah, MetaTrader. And then as soon as I heard that sound, boy, my heart sank, and she put heavy size on. Man. Back then, the drawdown I see now, that was like I couldn't even see myself getting to that drawdown. That's the drawdown I was in. And boy, ooh, I think she had to be 1.5. And boy, my heart sank. So I definitely get that. Let's see how price goes into this discount. And then if it gives us something inside of there, let me turn this background so you can see time interval better. Just like that. Right off that high, right into a discount. It's like clockwork, man. It really is. Now, let's say you were looking for a sell bias. Would you would have had one? Or you had this inversion right here. Yeah. Wasn't clean, but you had this inversion here. And confirmation would have been here. Initial stop loss. There. Man, this thing is butter. I swear, man, once you look at the model a certain way, you know how to find it. I think it's everywhere. It's always there. And wait for that confirmation, man. A lot of my struggles, like I said before, I had the model, just in general, was because I took the inversion too early. Just wait for it. So like even with this was 8 points. What was you aiming for? Because you know this consolidation is there. So even if you was aiming for this low, that was only almost a 1 or 2. Yeah, it gave you more after the fact, but that's not what you're aiming for unless you're aiming for this low here. Because when it comes to your trade, it comes to your stop loss, your risk, you have to be realistic. Don't say like, oh, I would have shot for this low, but then you see this consolidation here. No, you would have shot for this low and then hope that it went to this low after it potentially broke the consolidation like it did here, aiming for that low. But don't say you would have went for that low if you see this, because that's a roadblock. So you got to be really realistic with your trades, because what happens is, let's say you had that trade, you see it was like almost a 1 or 2, and that's right at the initial stop loss. And then you're like, oh, I would have caught that. I could have just risked with it to that low and took that trade. You could have. But if it doesn't play out, you can't say like, oh, it didn't play out because this, and that. Like, no, it didn't play out because you didn't listen to the right steps in the first place. You didn't have a right target. You had something stopping price from going to that target that you see that's actually stopping price from going to that target. And yes, you want price to break it, but that'll be your home run. That'll be your 2 to 1 turn to 3 to 1. You gotta look at it from that perspective. So let's take this one off. Give it some time, man. Let's see. So let me take this stuff off. As you guys know, I like a clean chart. We're out of this range now, so I don't need that anymore. We can keep that consolidation on there for the time being. Because you always want to label everything. Make sure everything is labeled, organized. If I need to turn something off quick, I need to know where it's at quick. The reason I don't say 1 minute consolidation on here or here is because this is a parallel channel. So I already know that parallel channels are consolidation for me. So I'll need to say like this is a 1 minute consolidation or 3 minute consolidation. Is that hard to see? Yeah, it's kind of hard to see. This new color is like this. It's the orange hard for you guys to see on this new background. If it is, I gotta either darken it up or use black or something. Because I'm watching it back on my monitor and I see it. It looks hard to see. That could be me just looking at it. But on my screen, it looks perfectly fine. Let me just do this. I do it like this. Is that better? It should be better. Slow price action, man. So we wicked into a discount. We're pushing right back up. But we do have this SIBI that's being created right now, which can be used as a confluence to continue to the downside. Like I said, we still have that Asian range high intact and prices consolidate. So price can go either way. But if we're bouncing off of this consolidation to have a continuation of expansion, which I'm referring to this right here. If it wants to continue, but the way price is looking right now, nothing's happening. So that back and forth. This 15. Let's see. Back and forth. Let me look at some other markets. Oh, wait. Let's look at gold. Same thing. Nasty consolidation. Well, we going off a nice push, though. Hold on, that nice push down. Go. Yeah, consolidating as well. Let's look at YM. Ooh, nice push down YM. What's that high? 44, 413, 44, 413. It went highs and drop straight to the downside. Yeah, because you would have had 15-minute inversion. Yes, sir. That was clean. After taking out this high here and then leaving equal highs. Usually this is the problem child. Usually this is Wick City here. Like, that's crazy day. So it's like 50 points. Oh, 30 points. Target the low Asian range, 50. Almost on 1 or 2. And then gave you the expansion down. Okay. Let me look at oil. Retracement. ES should be consolidated as well. Cleaner. Wow. ES is clean. ES is cleaner than NAS. That's crazy. Wait. ES made a low. Made a high. Made a low. Let's see. The price is gonna punch to the downside. What time is it? We'll give it 15 minutes. See if anything pops up in 15 minutes. If not, we'll call it there. Some type of crazy expansion. But market, I'm telling you, Mondays, man, I remember Mondays used to be the day where I just be so excited to get back to the market. And I just be forcing stuff. And then I got good, which is a scary thing. But I got good with getting myself out of drawdown. So it's like I wasn't scared of drawdown. It's just a matter of time before I got out of it. It's a good skill set to have, but it also can work against you because you become too confident. So you gotta remain even keeled, if that makes sense. Price is gonna do this all day. We should have a great market tomorrow. Oh yeah, and tomorrow. So tomorrow, maybe all this week, maybe the same time. Starting at the same time, 30 minutes after the opening. It'll probably just be for that week. Well, this week, and then I'll go back to regular 15 minutes before the market opens next week. It's just school schedules and stuff, trying to get that all flowing correctly, but trying to go live 4 times of the week. Fridays maybe days I don't go live, just because of just how I see Friday in general. Something I don't want to be participating in Friday. So technically, if you think about it, Friday it can be iffy, and then Monday it can be iffy. So it's like you got Tuesday, Wednesday, Thursday. Those days I really like. Mondays and Fridays are toss-ups. Monday can be good, but you can get days like this where it's like this type of Monday, where it's just consolidating. And then usually, sometimes, you'll get this on Wednesday because it's the middle of the week. So it really depends. So if if I had to think about it on how I look at the whole week, is Monday, I'm chilling, waiting for a clean opportunity. Tuesday, I'm more anticipating nice price action. Wednesday, it could be a toss up for me. It could be consolidation. So I'm kind of like, I want to push, but I'm also knowing that it's Wednesday and we can have consolidation because price just basically doesn't know where it wants to go, up or down yet, and we can just be stuck in the range. And then Thursday, I anticipate good direction to buy it. So, and then Friday, it's just like Friday, you want to get in and get out. That's just me with Fridays. You could be totally different, but you learn that off of you being in the market and me being in the market for so long now. It's something I wasn't even like, it wasn't something I was like telling myself like, okay, focus on the days. It just happened. And then you look up and you realize like, dang, Fridays I do not like. Mondays, they don't go nowhere. Wednesday is kind of iffy. So you develop that through out there trading. Price is going nowhere fast. 9 minutes. Like I said, if you don't do nothing, we can end it here. And expect good price action tomorrow. Hopefully. You drop down to a 3 and then a 1. Ooh, that is disgusting. Like, I don't like, and the thing is with wicks, I don't mind wicks because you guys, I use the midpoint of a wick in a heartbeat. Like, look, I see one right now, right here. Look. My eye just goes straight to them. I use them a lot. But when the wicks are all in one spot, disgusting. Nice drop off of that midpoint. If you want to, you can have this inversion here on a 3 minute. You can use this break here as your confirmation. If you're looking to go to the downside. So this will be gray for me right now until price breaks it. But if price does break this, then this can be your confirmation, and then you can have a 15 point stop. Target this low. 52 points. That's decent. So if it did break this, it hasn't did it yet, so. So there's two ways you can do this one. If it did break it, you can either risk the 1 or 3, but you're stop right at that high, which is calling it close because price could likely push up and go for that high. It could. The likelihood of it doing that, it's not a big likelihood, but price is still going back and forth. So you don't know. You can get a wick that can go that high. So it'll either be that or you just do a 1 or 2, which would be here, which is still a decent 25 points to go in the direction the market is going. But we still got Asian range high right there, and this hasn't closed yet, so we don't have any model yet. You have an inversion, but until you have a confirmation, you don't have a model yet. And that's what people get it confused at. They see the inversion, automatically think there's a model. No, this candle has not closed on below this imbalance, the low of the imbalance. Making sure you have that confirmation will save you so many times. "13 seconds. There's that close. Is price trying to be slick by closing below it by a tad bit and then pushing to the downside? And something like this. Let's say you have price action like this, right? And you got this confirmation that you want to get into, but you're not sure. Sometimes price will push up, just wait for it to push up and then come back down to it, the low. Because if your entry is here and you're not confident in it, then what you can do is just let price do what it needs to do, push up, and then once it comes back down more low it and breaks it, then you enter there instead of entering right when it makes it. So it depends. So a toss up. This type of market, especially how it is right now, I'll let it run up and then just enter it when it breaks back below. Now that can happen with this candle right here, but you got to accept that as well. Because if this candle, you say, you know what, I'm gonna wait till another candle does it, then you got to be okay with this candle just flashing up to the downside. And the main reason why you would even consider this model is because what? It's in a premium. Even if it doesn't play out, it's in a premium. You have to be okay with the risk. That's the main thing to it. All right. I'm gonna leave you guys with that. You got this 3-minute model that can potentially play out. And keep it easy, keep it simple. Today's market structure is consolidating. Just remember that, so don't let nothing entice you. And we'll be back at it tomorrow. It'll be same time tomorrow, so 30 minutes after the market opens. Now let's go ahead and kill it. See you guys tomorrow.